Hi guys, and welcome back to the channel. Now in today's video we're going to be covering my daughter's junior stocks and shares ISA portfolio. This marks 1 year and 2 months worth of investing in this simple strategy for my daughter. For anyone new here, this is a really simple investing strategy. I invest consistent, small amounts every single month to help grow wealth over the long term. The idea here is to show that a simple, hands-off approach to investing can sometimes be the easiest and most effective. This is the strategy I've chosen to go with for my daughter's portfolio, and I'm hoping it'll inspire you to invest for your kids or even for yourself. Now October was a really strong month for this portfolio, and we did in fact reach an all-time high, which was welcomed after quite a mixed year so far. Since the start of November, the markets have pulled back ever so slightly, so in today's video we'll go over the latest contributions, performance so far, and also some of my thoughts going forward. So let's jump in and take a look at that portfolio. Okay, so jumping straight onto the Vanguard platform here, we can see that the total value in this portfolio is just under £2,250. We can also see here, as I mentioned earlier, everything is invested in one single fund, and that's the FTSE Global All Cap Index Fund, and it's the accumulation version. Put simply, that just means that any dividends it would have paid out are automatically reinvested, meaning it's a really hands-off approach, which is exactly what I'm looking for my daughter's portfolio. It's not one that I want to have to manually manage every day. I want it to be as simple as possible and compound in the background. So if we go into the performance and into the month tab, let's take a little look at how October finished off. So we had an absolute record month, as I mentioned earlier. So going into October, we had £2,066. We gained a massive £95.31 for the month of October. Add on our monthly contribution of £60. So for anyone new here, that's the amount that I put in at the start of every month. Whether the market's high or low, it's not really about market timing, it's about the long-term effects of investing. So the start of every month, £60 goes in. So that's what happened there. If you've spotted slightly higher amounts here and you've not watched my videos before, it was my daughter's birthday in August, so there was a little bit of birthday money as well. So around Christmas and her birthdays, occasionally there may be a little bit more money that goes into here. But on the whole, month to month, it is generally that £60. So, as I mentioned, we've had £95 of growth for October, and also pair that up with the additional £60 that we'd put in, we had an ending balance of £2,221.50, which, that's not far off a £200 growth, really, overall between my contributions and also the portfolio's growth. That took us from £217 worth of gains on this particular fund up to 312, which for a relatively small portfolio, £2,200 or around that £2,000 mark, it's not enormous, is it? So really happy with that. You've got to think, if this portfolio was 10 times the size, that would probably be £950. That's when it starts to become quite large amounts of money and really making a difference. But we're at the real start of this journey here, and ultimately I've got another 17 years, just under 17 years, to grow this portfolio for when my daughter turns 18. So it's great to see that we're already starting to see a little bit of compounding effect even in these early stages. Now, as I mentioned before, £60 gone in at the start of November as well. But since then, the market has pulled back slightly. So we gained 95, which was great in October, but we've since sort of lost 34. Now, it doesn't worry me. The market does this all the time. It's up and down all the time. If we go back to earlier this year, you can see here in February, March and April, they were particularly quite bad months in the market, I guess, but again, you can see on the whole it's generally short-lived, a bit of pain for a few months, but then it rebounds, and really where we've come from is the market rebounds even higher into a higher position than it was pre these months where it struggled a little bit. So yeah, on the whole, still really happy. It can't be green every month. And if you're new to investing, don't go in thinking that everything's just going to be, all singing, all dancing and green every month. As much as we would love that, it's just not the reality. The market does go up and down, but from my own personal investing, I don't do it on this portfolio, it's just that set amount on the first of every month, but of my own portfolio, my own investing, which is quite well documented on this channel, when the market does dip like this, I see these as not sort of panic, hit the panic buttons and, I need to sell everything because the market's going down. I do quite the opposite really, and I see these as opportunities to buy stocks or funds like this at a discount, because I know when the market does rebound, I'm going to gain a little bit extra from doing so. A little bit of market timing in there, if you like. So yeah, coming up to the headline figures, we've put just under £1,970 in this portfolio. Total gains of just under £280 so far. So yeah, we've got a total of just under £2,250, which gives us a rate of return of 23.39%. Now, if you're looking at this thinking, hang on, that's not 20% of this figure, that's okay. The rate of return is calculated a little bit different. The rate of return calculates things such as each time I've purchased more of this fund, what price did I get it at, different timelines, so you've got to think that money that went in at the start of November, that's not yet been in a year, has it? That's only been in a number of days. So it takes all these calculations and kind of merges them into a different figure. But overall, of the investments that we've made at the different times, we're returning 23.39%, which for just over a year is, look, I'm overly happy with that. The market's been really strong since we opened this account, which is great to see. And if we go to the calculations page, again, a little bit of a breakdown on what's happened here. So gross interest, so that's just if there's ever been any cash sort of sat in the account, we've had 19 pence. Really, I don't know why that isn't zero, because everything's been invested every time, but I'll take it. Investment sold, so the investment sold is, say if there is no cash in the account, it will sell, pence of your investments to cover the fees. Which you can see here. So for 14 months in this account, Vanguard have charged us 1.71, and that's basically the cost of the fund itself, and also a really minor platform fee, I believe, as well. So yeah, really quite minor in the grand scheme of things. And if you think of, a typical savings account, a junior cash ISA, we are far surpassing the possible interest we'd get from a cash ISA. And because I'm investing for 18 years, investing in stocks or funds like this generally and historically has been the better way to go. I'll quickly cover the Insight tab. I always cover this, but for anyone who's new to my channel or new to investing, on the Vanguard platform, it has this really nice graphic of showing where we've got investments. Now I picked that one global fund. Within that fund, there are thousands and thousands of companies in there, and this graphic allows us to see, okay, around the globe, what's the proportions looking like? How many companies and exposure to different companies are there? So 67% in North America, no surprise there, being one of the biggest markets in the world, the biggest market, in fact. Europe, 11%. We've also got 11% in Asia Pacific. Underneath that, a little bit in Japan at 6%, the UK even have 4%. So you can see we're quite globally diversified. We are quite heavy into the American market, which is okay. That's where majority of the growth has been historically. And I can't really see that changing anytime soon. The great thing of being in one of these index funds though, I haven't got to manually, change these weightings. If suddenly tomorrow the UK market became, this world dominant market, and the US market shrunk, the index would adapt, to compensate for that. So I haven't then got to go in and change anything. That's one of the great things of using a fund like this. It kind of handles all that bit for you. Top 10 investments, again, a lot of names here I'm sure you'll recognise. Apple, Microsoft, Nvidia, Amazon, Google. We've even got Meta or Facebook, as some may know it as. Tesla's even there, Taiwan Semiconductor. So big global companies which are pushing that market growth. And then sector allocation there. I was thinking of technology there. That was a bit of a combination of the two. But yeah, technology, no surprise there, being the biggest holding, especially with this sort of expansion of AI as well. Financials, and then you can see there they kind of go down tiered but fairly evenly split before we get down to these smaller numbers. So that's it for our November update. After hitting all-time highs in October, the market has pulled back slightly in November, but this is a long-term investing strategy, so make sure you don't panic when this happens. Really looking forward to see how this shapes up on the run-up to Christmas. Now, historically, we've experienced a bit of a rally in that run-up to Christmas, but equally, we have things coming in such as our autumn budget, so there's a few different factors there to be wary of. If you're new here, don't forget to subscribe. I post monthly updates of this portfolio and also monthly updates of my own personal investments. Outside of this, I'll cover investing topics and also personal finance topics, so if any of this sounds like you, then make sure you hit that button. If you found this video useful, then make sure you give it a like and let me know in the comments how your own portfolios have been performing. Thanks so much for watching, and I'll see you in the next one.